Ladies and gentlemen, good day and welcome to the S. Chandan Company Limited Q3 FY23 earnings conference call hosted by Prabhudas Lilladher Private Limited. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I would now like to hand the conference over to Mr. Jinesh Joshi from Prabhudas Lilladher Private Limited. Thank you. Over to you, sir.
Thanks, Dorwin. Good afternoon, everyone. On behalf of Prabhudas Lilladher, I welcome you all to the Q3 FY23 earnings call of S. Chandan Limited. We have with us the management represented by Mr. Himanshu Gupta, who's the MD, Mr. Saurabh Mittal, who's the CFO, and Mr. Atul Soni, who heads the investor relations strategy and the M&A department. I would now like to hand over the call to the management for opening comments, and probably after that we can open the floor for Q&A. Over to you, Himanshu.
Thank you. Good afternoon, ladies and gentlemen. I'm Himanshu Gupta, the Managing Director of S. Chandan Company Limited. I would like to welcome you all to our third quarter and 9-month results conference call for FY23, and thank you all for taking the time out and joining us here today. I'm extremely happy to share the 9 months FY23 has been a record 9 months for S. Chandan in its history. We would like to highlight the following key points for this period. As you know, we are a seasonal business with majority sales coming from the January to March quarter. We are confident of our performance during the current sales season, as we are witnessing strong demand in the current sales season of January till 23rd, or January to March 23. This is the first disruption-free full sales season that we have seen after a gap of 3 years. We saw the highest ever 9-month sales in company's history. We saw the lowest ever 9-month EBITDA losses. 9-month EBITDA losses reduced by 38% YOY. We saw the lowest ever 9-month PAT losses. Reduction in 9-month PAT losses by 62% YOY. We saw the lowest receivable days in 9 months in the past 5 years. We saw one of the lowest net working capital days in 9 months in the last past 5 years. If we calculate PAT on a trailing 12-month basis, the company's PAT was rupees 812 million during calendar year 2022. Saurabh will touch more about these in his comments. On the school education front, we got the big launch of National Curriculum Framework, or NCF, covering the foundation stage classes kindergarten up to class 2nd in October 2022. With this announcement, we look forward to more such announcements for other classes coming through over the next couple of quarters. We already created new content and books based on the new curriculum for these classes, and we shall see the sales of these happen during this ongoing sales season of January to March. From a numbers perspective, K2 contributes approximately 15 to 20% of our school revenues. On the higher education front, it was business as usual for the segment as colleges were functional and physical mode for the new academic session in various engineering and commerce universities, though the session was delayed due to late board results and CUET results. The NEP has been implemented in a few states where we are seeing strong traction for our products. We are expecting a strong finish to the year for the higher education segment on back of resumption of normal academic activities across colleges and universities in the country. On the EdTech investment front, we made our second profitable exit this year from the sale of our stake in iNeurons for approximately 138 million in December to Physicswala. This translates into a 2.1x return over our initial investment, which was done only in December 2021. On the EdTech front, our S. Chandan Academy on YouTube continues to have phenomenal success in a short period of time. We have now launched over 900 videos focused on higher education, covering science, engineering, and test prep. And so far, and the channel has already notched up approximately 10 million views and 100,000 subscribers. This further enables us the promotion of our print content, further spurring demand in that segment with the blended offering. This channel enables students to learn critical areas through top-notch educationals which may not be available in Tier 2 and Tier 3 colleges. Test Coach, our test prep and higher education app, is seeing strong traction to cover over 100+ government vacancies, which is a huge market. We are adding additional features apart from mock tests. There will be concept videos, doubt clearing sessions, etc. We expect increase in the government vacancies now as things are normalized post-COVID and with the elections due in 2024, which would further spur demand. The print content business has almost had 3 years of disruption, which has impacted a lot of small and medium-sized content providers. In the post-COVID world of supply chain disruptions, raw material shortages, and price fluctuations, we are well placed to capitalize on our premium product range, brand, distribution network, relationship with educational institutions and customer service, along with the financial strength of the organization. We also see a lot of schools that have closed down or strength reduced during COVID, having higher admissions, which is further spurring demand. While EdTech has its place in this ecosystem, we are witnessing a rebound in school and college admissions with students eager to join classes physically rather than virtually. I would like to highlight that above opens up an opportunity for us to enhance our market share, and we are working tirelessly for this. With that, I will now request our CFO, Mr. Saurabh Mittal, to provide us on the financial performance of the SCHAM. Thank you.
Thank you, sir. Good afternoon, everyone, and thank you for your time. I'm Saurabh Mittal, CFO of SCHAM. In terms of numbers for the first 9 months, our consolidated operating revenues came at 2198 million versus 1390 million during the same time last year, registering a growth of 58% versus the same time. There's been an increase in our gross margins in comparison to last year in spite of sharp increase in paper prices as volumes brought in economies of scale, realizations improved, sales returns were lower, and existing inventory got liquidated. Our EBITDA losses reduced by 38% to 504 million loss versus a loss of 809 million in the corresponding period last year, in spite of undertaking salary hikes, higher marketing and travel spends during the period, spurred by higher volumes. Our PAT losses reduced by 62% to 441 million versus a loss of 1173 million in the corresponding period last year on account of higher revenues, profit from stake sale in Textbook and iNeuron over the past 2 quarters. I would like to bring your attention to slide number 9 to slide number 11, which showcases the results of the steps taken during the past 3 years towards building a cost-effective and lower working capital organization. We continue to focus on working capital rationalization and product rationalization for the coming year. Trade receivables reduced to 1552 million during Q3 FY23 versus 1728 during Q3 FY22. This is the lowest receivable days in Q3 in the past 5 years. Inventory, however, increased to 2489 million versus 1763 million in Q3 FY22. This increase is driven by advanced raw material purchases and the corresponding earlier printing of books for the sales season this year, where we are seeing a robust demand. Do keep in mind that a large portion of our increased inventory includes raw material paper inventory of rupees 859 million versus 360 million. In terms of inventory days, it stood at 371 days versus 340 days in Q3 FY22. Net working capital reduced to 189 days versus 221 days in Q3 FY22, which is a reduction of 32 days over the previous year in spite of increased inventory levels. This is one of the lowest net working capital days in Q3 in the past 5 years. We ended the third quarter with a net debt of 1224 million versus 1571 million in Q3 FY22, and gross debt of 1808 million versus 1896 million in Q3 FY22. Net debt has reduced by 347 million on year-on-year basis. As we head into a strong sales season for this year, I would like to reiterate the following. Firstly, we have taken price hike across our product portfolio upwards of 20% to mitigate increased paper prices. This would provide a strong boost to our Q4 sales. Secondly, we reiterate that we are looking to do a revenue of over 600 crores, which translates into 25% growth for the year. Do keep in mind that this is a conservative guidance from our part, and we are on course to beating this guidance comfortably. Thirdly, unprecedented hike in paper prices may put a pressure on gross margins to the tune of 100 to 200 bps. We are looking to counter paper prices through our price hike, improving realization, internal efficiencies, and continuing cost control, which for the first 9 months has helped us maintain gross margins. Fourthly, on the debt front, we are well on our way to become net debt free by the end of this year and further optimize working capital going ahead. Fifth, the biggest growth driver for our print business could come from the introduction of the new syllabus post the announcement of the NCF for the remaining K3 to K12 classes, which contribute almost 80% of our school education revenues. This should lead to a strong revenue and profitability growth for the next 2 to 3 years period. With this, I would like to open the call for questions. Thank you.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Nitin S. Dharmawat from Aurum Capital. Please go ahead.
Yeah, thanks for the opportunity. A couple of questions. So, first is how many days of raw material, that is paper inventory, that we have now?
Raw material inventory, sir, this is around, this inventory was 860 million, which was in December. So current right now, I have to check up with my production team, but we will have inventory for not more than some maximum 20 to 30 days as of now.
Okay. So we'll be able to cover the ongoing or the upcoming session, the books for that, or will be required to add more paper for this?
So we have ordered some more paper in January also, sir, and we have ordered some in February also, and we'll be ordering as per requirement. We will be ensuring that we have optimum paper. We don't want to over buy also and not under also. So we'll be looking at optimum requirement. It's a very tough balancing act that we have to do, because we don't want to over order or we don't want to have a shortages in supply. So we will ensure we create that balance, and whatever is required for that, we will be ordering, sir, as per requirement.
Okay. So is there any correction in the paper prices now, or they are stable, what you see?
As a matter of fact, they've started to increase in the last 1 month.
Oh,
and paper prices have already shot up by, depending on mill to mill, between 3 to 5 rupees already shot up. And that is happening because there's a lot of demand in the domestic market because of the state board government tenders which need to be fulfilled before the budget of 31st of March. So there is more than 120,000 tons of already state board tenders which are released, and some may more be released. So paper mills are running at full capacity as of now, as per our knowledge.
Okay. This next question that I have is, are we planning to make any new acquisition, or if so, what will be the likely amount?
As of now, so we are not looking for any acquisition, because we believe that the next 2-3 years is going to be good in terms of because of the new NCF that will come for other classes from 3rd to 12th, and we'll have a complete syllabus change from K to 12. So we believe next 2 to 3 years is a good runway, and we should be able to focus our efforts there. But if we get something out of the extraordinary in the meantime, we are not looking for it as of now. But if we get something, then we can discuss it internally. But as of now, we are not searching for and looking for any acquisitions per se.
Okay. And any plans to make new minority investments, because 2 exits we already taken, profitable exits we have taken. So any new plans for minority investment in startups?
Yeah, so we are getting inbound queries quite a bit. We continue to meet people, but until the time that we see there is something which will create long-term value for us, and we've got our own metrics on how we want to see each of these. It has to be near profitability. The size and valuation has to be to our liking. To that extent, as and when something comes up, we will definitely have a look at it. We do have inbound queries. I mean, we're probably getting 2 to 3 a week, but again, some of them are quite outlandish. But we will look at those ones which are genuine and have a good runway ahead.
Okay. And see, regarding this YouTube channel that you mentioned, and we have got good traction over there. So what do we want to achieve out of it? One is that indirectly, pushing our published books. But what is our ultimate objective out of this YouTube channel? Do we want to monetize this? Where do you see this moving as we have more subscriber base in the YouTube channel?
So we believe that this is a good, I would say, a synergy between our book and the digital platform of YouTube, and the children who have a doubt clearing or concept clarity problems, they can visit the channel, and each chapter of our books now has a video lecture based on our books, and the question and everything is related to the book. So it's a good traction for the student and for us also, because the student needs to purchase the book to actually go to the YouTube channel and understand that topic. Without that, it will not be good for him to understand, because the questions are pertaining to the book only. So that helps us in boost our print sales. That's number one. Number two, giving the YouTube traffic, we make some sort of monetization, but right now it's a very small amount. In the future, we can look at increasing that monetization through either we take on more advertisers or promote, or we look some promotion activities, or even we can look at offering some of our products as a premium offering, which we can charge also. But as of now, currently we are not looking at it. Currently we are looking to increase the subscriber and the viewership base. And the good news is we just reached yesterday 100,000 subscribers, and which is a good number for last 12 to 13 months we have been doing this activity. And we believe this number is bound to grow a lot, because more videos are coming in, and even school videos we are going to add on this channel. So we believe this is going to be a good traction, and let's see if we can monetize it some time later. We will look at that option also.
Okay. And my final question is about the revenue and EBITDA guidance. You mentioned in your commentary that we have got good traction now, and we have taken price hikes, and there is a possibility of overshooting 600 crore revenue guidance that you have given. So can we expect somewhere close to what number? That is what I wanted to know, and also the EBITDA guidance, if you can reiterate that.
Yeah, so we should be hitting around anything between 640, 650 by the end of this year. That time we are pretty confident of hitting that, and EBITDA between 16 to 17% is something that we are targeting.
Got it.
In terms of gross sales, what numbers I have, we are doing pretty okay. So our sales is pretty okay on track, and we actually going to cross our budgets also in some of the companies. So we are at a decent run rate, I would say, on a daily basis.
Fantastic. All the best to you. Thank you so much.
Thank you, sir. Thank you so much. Thank you.
Thank you. Participants who wish to ask questions may please press star and 1. The next question is from the line of Raj from Arjav Partners. Please go ahead.
Wanted to know how much of cash do we have as of Q3 end?
Cash at the end of Q3 was around 40 crores.
40 crores, yeah. And regarding FY24, how do you think the growth to look like in terms of sales and everything,
So I think we will come to that at the end of at the end of FY23. I think that will be a good time to give a guidance or speak about FY24. But broadly speaking, we are very confident of the numbers in FY24, because as and when the NCF comes out for other classes, so there is surely going to be a very strong growth momentum going through into FY24. But let's discuss more about that, when we come out with our Q4 results.
Yeah, sure. Thanks. Have a good day, sir. Bye.
Thank you.
Thank you. The next question is from the line of Kalpesh Parekh from JSM Advisory. Please go ahead.
Yeah. Good afternoon, sir. Good to see numbers coming in terms of top line, in terms of EBITDA after 4-5 years of your hard work in bringing back business, streamlining it perfectly. But just I have a couple of questions. One on this NCF thing, which was announced in October, NCF policy. Now, I believe that, a lot of school patterns and everything will change in the coming years as such. So now this is the moment what we have been waiting for last few years. Do you think so? And what type of opportunities this will create for us? That is second. And third, in terms of working capital, I just wanted to understand that, you have made a lot of effort in bringing down your working capital cycle. Now, with this NCF policy coming in, whether we will go back to again the old working capital days, higher days, or we are still committed to, bring down working capital cycle further? Thank you.
So let me answer the first question. Second question, working capital, Saurabh will be able to answer better. So the NCF would definitely help us in reduction of the used books and the second-hand books which are there in the market and which always persist. That will be completely removed from the system, and we will see a 2 to 3 years good runway of growth because of the new syllabus coming in, and that will give us a good traction in the market. And NCF is going to be a big boost because NCF is coming after last was in 2005. So almost a gap of 18 years, you can say the NCF is coming out, and that will be a big boost to the publishing industry, and especially to those people who have the financial willpower to put in extra resources in terms of content, in terms of ensuring proper sales and marketing activities, and ensuring the right supply. That will that will have bigger advantages. And in Astran Group today we are financially strong. Our net debt after the fourth quarter might be almost next to zero. So that will help us. All these things will help us in riding the wave of the new curriculum. And we will take advantage of that activity, and that should help us in next 2 to 3 years to have a good runway for growth. And as for the working capital, Saurabh, I think you can answer better.
Yeah, so in terms of working capital, I think we've changed the way we were working earlier, and I don't anticipate we'll ever go back to the earlier working capital. We have reduced the number of SKUs, so our inventory will be limited by the year end every year. We are controlling all print runs, ensuring that inventory is well controlled through the year. In terms of receivables also, we've become very strict in terms of what kind of partners we want to work with, and we continue to focus on getting our monies back on time and not working with certain partners who would delay. Our returns are well in control, and that is something that we will continue, so that also helps us. So in terms of working capital, I don't think we'll ever go back to those the higher earlier days. Whatever numbers that we are working on right now are sustainable, and with the growth, these numbers can only get slightly finer. So we are targeting better working capital rather than going back to the earlier days.
Yeah, thank you. And just one question connected to this NCF thing, sir. In terms of NCF new regulation, will there be any cap on the pricing for your books as such? I mean, just to other way of asking question is probably whether can we have a better pricing over the current syllabus as such, or no, it will be price determined by board only?
No, price is never determined by the government or any board. And for the private publishers, the price is only determined for the government books like NCERT or CBSE books. We have an open pricing policy, and we can keep pricing as per our internal system. So there is no cap on anything, and we don't perceive that there will be any cap in the near future also. And we will be pricing the books as per the need, as per the customer requirement in the market, and keeping making sure that the price of the books are not also overpriced also, so that the customer has a difficulty in paying for that. So we will keep the customer in mind before pricing any of our products, and we will continue to do so in the future also.
Wow, super, sir. Sir, last question. Cash flow from operation was, I mean, for 9 months turned negative only because of the inventory issue. So in future, we should expect cash flow from operation to be positive, as we have seen in past?
Yeah, the full year cash flow from operation will always be positive. Q1, Q2 is normally positive. Q3 will be negative consolidated because, of course, with paper inventory will always be higher at the end of Q3 because the printing season is going on. Because supplies start only in January to most of the schools. So that is a temporary phenomena. I think going forward, by the end of this year, of course, definitely cash flow will be at least to the level of last year, if not more.
Super. Wish you all the best, sir. Thank you very much.
Thank you.
Thank you. We have the next question from the line of Devarsh Vakil from HDFC Securities. Please go ahead.
Yeah. Am I audible, sir?
Yes, you are.
Yeah.
Yeah, thank you. So thank you for the opportunity. I have a question regarding the mechanism of this NCF works. So they have announced for standard 1 and 2. We were hoping that the second tranche of maybe third, fourth, and fifth standard they should have announced, but it seems they have not come out with it. So is there any procedure they follow, or is it based on a discretion of the minister or the government that they will come out as and when they are comfortable? What I'm trying to understand is there any risk that they may delay it for a year or a two, and then after election they will announce for 3, 4, 5th standard, or that is not possible?
We believe that it's our belief and our industry sources that we have knowledge from, that they would be releasing the NCF in the next couple of quarters. They should release it before the election, because it's long overdue, and we believe that it should come out, and rest is on the government at the end of the day. We cannot control the government policy. But even if 1%, let's imagine the NCF doesn't come out, still also we believe that the company will have a strong traction next year also. And if the NCF come out, then it will be a stronger traction. But if it doesn't come out, then it will also have a strong traction, because our system of sales and marketing and relationship building with the schools is quite good, and our products are quite well accepted in the market. So we are on track to having a higher growth next year also. But obviously, if the new curriculum comes out, then it will be a much better for the industry and for the company.
Okay. So any unofficial or soft guidance you got from government that when they are planning to go for the step 1 to step 2, and it will be for third, fourth, and fifth standard, or it is not fixed?
No, it will be from third grade to 12th grade, all the classes.
All the classes as a one go now?
Yeah. So that's what we are hearing. And we can't comment on that, but
I understand.
That should come out in the second or third.
Right.
Yeah.
Right, and so once that comes, third, fourth, third and onwards, then in past they had followed a policy of releasing for some standard and then going to the next standard. This time the thinking has little changed, and now they are thinking of going ahead with the complete change, and that would be one big boost whenever it happens. Is my understanding correct, sir? Yeah,
this will happen now. We feel is going to happen in one shot. And that will the change of syllabus will impact us in the FY24 positively, and for the school going children, the academic year 24-25, they will have the new syllabus with them, and we believe that it will be a one shot thing.
Okay, sir. So thank you and all the best.
Thank you.
Thank you. The next question is from the line of Tariq Hussain from Gringotts Capital. Please go ahead.
Hi, thank you for the opportunity. I just wanted to ask, do we sell our books through any online channels like Amazon, Flipkart? And the reason I asked, because I tried buying H-Chan books last quarter, and I could only find third-party sellers that are selling H-Chan books, but nothing from our own storefront.
Yeah, so we have our own website, but of course the traffic is limited there, because we do not do individual selling, and we do not encourage individual selling to that extent. However, we do have partners who do a large chunk of our sales online. I think the total business online for us should be about 30 to 35 crores, if I'm not mistaken, for the full year.
Okay. Because I believe if we have our own storefront, like a lot of, at least in tier 1 cities, a lot of books are bought online. And I see a lot of the third-party sellers kind of cannibalizing our sales there. So just my feedback on that.
I mean, we did have an account with Cloudtail directly earlier, and now, of course, since they've closed down, we are seeing whether the new entity will take it over. Till that time, of course, third parties continue to provide, because it requires warehousing and supplies all over the country. We only have a central warehouse in NCR, so that's one of the challenges for supplying around the country. So we prefer to do it through partners, and it really doesn't impact much of our margins if you do it directly or through the partners.
Okay. Thank you. That was all my question. Thank you.
Thank you. The next question is from the line of Manan Patel from Erawat Capital. Please go ahead.
Thank you for the opportunity, sir. Am I audible?
Yes.
Thank you for the opportunity, sir, and congratulations for good numbers. Sir, first question is, I am new to the company, so just wanted to understand, paper prices in general have been cyclical past and have been going up for a few years now. So what are your views on paper prices in, let's say, next 2 to 3 years? And if and when paper prices fall down, what is our ability to hold on to the price hike that we have taken? So if you could throw some light on that.
So paper prices in last, because of the corona time, the paper prices were quite low and we had a benefit of that. But after the corona last year, they started increasing from January, almost a year back, and they have kept on increasing the whole year. But they got stabilized, I would say, in October, November, December, quarter 3, and in starting from quarter 4, they have started increasing again. But we believe that paper prices should stabilize or should even go down after the, I would say, quarter 1. And at that time, we do our main purchasing, so we should get the benefit of that. How much they will go down, how much we get the benefit is still a difficult question to answer. But we have increased the prices, and the normally book price we have seen, when you increase them, they don't go down. But this year has been a substantial increase of book prices by 18 to 20%, or even higher in some cases. But going ahead in the future, we don't perceive that we'll be increasing prices on these levels every year. The normal paper increase, the book prices increase is 7 to 8%. That's a normal year, but this year has been exceptional. And we believe in going ahead in the normal years, we should be looking at the same increase of prices until and unless the paper prices increase substantially. Then it's a different story. But we do not perceive as of now the paper prices to increase substantially in next 12 months. After that, giving a long-term prediction for paper is very difficult, because there is a war happening in Ukraine and all those things happening all around the world. It's very, very difficult to answer that question.
So, I mean, it's a global commodity, so obviously the headwinds and tailwinds are very different.
Understood, sir. So, sir, would it be safe to assume that if paper prices stay here or go down, our gross margins can expand from these levels? Is it safe assumption?
See, gross margins to an extent are pretty decent in terms of 55-56%. I don't see them moving north of 60%, because again, when prices are there, we'll have to hold certain prices. We may have to reduce price of certain books because affordability does become an issue at some point of time. So we would like to ensure it remains decent. 55 to 60% is the sweet spot. Beyond that, I'm not sure it will be very easy to take off, because again, schools also become very wary of the price of books. So we'll have to have a fine balance between that. One-off year we may have a good jump, but on a sustainable basis, I think we have a decent gross margin.
Okay, understood, sir. The second question is regarding our capital allocation strategy over the longer term. So, last few years we have been trying to reduce working capital and reduce debt. Now we are already close to becoming net debt free. So, would it be prudent to assume that you will think about dividend policy or buyback policy going down the line? Because as you mentioned, the working capital should remain steady and you will be generating substantial cash flow from operations. So would you be thinking on those lines?
Yeah, definitely. Dividend is definitely something that we are thinking of. For the once we close this year, we would be definitely giving it some allocation, should be. And going forward, but again, depending upon if there's an investment opportunity or an acquisition opportunity, if not, we are happy to have a dividend policy in place to allocate whatever earnings we get.
That's great, sir. Wish you all the best and hope for better results in coming. Thank you, sir.
Thank you. Thank you.
Thank you. Participants who wish to ask a question may press star and 1. The next question is from the line of Ankur Kumar from Alpha Capital. Please go ahead.
Hello, sir. Thank you for taking my questions. Sir, on the guidance you spoke that 650 crore type revenue and 16-17% EBITDA, that would mean 160 crore type EBITDA in the fourth quarter. So can we expect that kind of number? Am I right on the numbers?
Sorry. Just give me a minute. EBITDA margin on page 15, I think.
We are at 22.50.
That's correct.
Yeah, 165.
Sorry, sir?
Yeah, once yes, that calculation is correct.
That's fine.
So we can expect 160 type in the Q4?
Yes.
Okay, sir. And sir, in terms of growth, if new education policy doesn't come, then what are our growth drivers coming into the FY24, sir?
So regular growth is always there because the student numbers, our population increases in India, and more students are now back to private schools, which had gone to government schools in the COVID period. So that's one. And secondly, our company is having, I would say, a stronger sales team, a stronger marketing effort, and a stronger network in the market that will help us boost the sales. And there is a regular volume growth also which happens in the market in normal year. 2-3 years with disruption because of Corona, that's a separate story. But normal year, there is a growth of 4 to 5% on unit sales plus the price increase. And if the smaller players in the market are right now facing some financial headwinds because of 2-3 years of disruption, so we would be able to take more market share from these smaller players. That will help us in improving our market share in the market, in the whole India market. And if the NCF happens, then obviously it will be a big boost.
So can we expect double-digit growth if the NCF doesn't happen?
I would say so. I would say low double-digit numbers if the NCF doesn't come in, and if the NCF comes in, then it will be a high double-digit number.
Sure, sir. And in terms of seasonality, cyclicality, if Q4 is much better than all of the other quarters. So anything we are thinking on in terms of reducing this number, is it possible to do that or no?
Reducing which number?
As in Q4 is much higher than rest of the 3 quarters combined. So can we do something in terms of reducing these dependencies?
Unfortunately, it's a seasonal business because, as you understand, the children go to next classes in CBSE and ICSE schools normally from the April month, and the children and the parents buy the books in March. So this seasonality is not in our hands. Until and unless the school changes the academic year and the changes the month the student goes to class, it's unfortunately going to not be in our hands.
Sure, sir. Thank you and all.
Having said that, become quite significant in terms of for this year, and we hope to maintain that in the coming years. Because that is one change that has already happened during this year.
Sure, sir. Thank you and all the best.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, you may press star and 1 at this time. The next question is from the line of Nitin S. Dharmawat from Aurum Capital. Please go ahead.
Yeah, thank you. Sir, you mentioned something about the next round of NCF. When are you expecting that to come? Sorry, while you were talking about it.
So we are expecting Nitinji to maybe it comes in second or third quarter.
Second or third quarter of next financial year?
Yes, sir.
Got it. Thank you so much.
So, thank you.
Thank you. The next question is from the line of Purushottam Savlani, an individual investor. Please go ahead.
Thanks for the opportunity. Congratulations for better looking numbers. My question is predominantly from a longer term perspective. Are we thinking of adding some business lines which one takes care of the seasonality of business what we have, where Q4 becomes much bigger? And also, with NCF, one can understand that we may hit 25-30% kind of revenue growth year on year. But without that, we go back to say around 10-12. So are we thinking of adding some additional business lines besides publishing business so that we get on to our normal 25-30%? I mean, I'm talking about from an education field, adding some other products, services or something of that sort. That's the question.
We do a college and higher education business. That is not a Q4 dependent business. That happens in mainly that business happens in Q1 and Q4. Test prep business continues for all 12 months, but the total number of that in terms of revenue is around 15 to 20%. So it's not a very large number. We are right now not looking to add any new product lines to compensate on the seasonality because we believe next 2 to 3 years is a good runway for growth, and we will be concentrating more of our efforts and energies in making sure that we are able to take a bigger chunk of the market and putting all our energies there. Seasonality is not in our hands, and right now we are not looking to expand our product portfolio into any different lines. Yes, digital, we are doing some bits here and there in terms of YouTube, and we are making some apps and everything. That is basically just to making sure that the books have some kind of a hybrid or blended learning approach towards it. But in terms of new product lines, as of now, we are not looking into expanding anywhere different.
Okay. I was just talking from a reference. I was going through some of your competitors, maybe global also. They have multiple lines of other businesses which they have added and have grown. So I thought maybe I'll ask if you have any such plans in future.
Not as of now, sir. Not as of now.
Okay. Thank you.
Thank you. Thank you.
Thank you. The next question is from the line of Akshay Kothari from Envision Capital. Please go ahead.
Thanks for the opportunity. I just wanted to know.
Sorry to interrupt.
Yeah, am I audible now?
Yes, you are audible.
Yeah.
So just wanted to know whether the industry has structurally changed somehow, because with the onset of all these online classes and
excuse me, you are not very audible. Can you please speak a little louder or come closer to the mic?
Yeah, okay, sure. Am I audible now?
Yeah, better now.
Okay. So with the onset of online coaching classes, structurally many students are enrolling more for tuitions right now. So what I have seen is generally these tuition classes or online coaching classes also provide books with them. So whether students are on a pull basis buying our books or buying it as a compulsion or because the school suggests the books.
So that's basically what happens is when you go into the test prep segment, to people who take tuitions or are taking online tuitions do get the set of books from some of the players, like Physics Wala is doing it, and other players also doing it. But that happens for basically we have seen mainly for vacancy markets, which are dedicated towards one vacancy or one job opportunity. What books we sell for the test prep market is basically for general market, where you can buy a book and use that book for 20, 30, 40 vacancies. So normally that's the purpose of selling our book. And in the school business, if you see people who take tuitions, normally the tuition centers do not provide the books to the students in the school business. They have been provided either by the schools up to 8th standard, and above 8th standard, the children choose the books as per the need of the student and as per the recommendation of their peers that happen. So that is doing well for us. So that's not a problem I see in the near future.
Okay. Thanks, sir. Yeah.
Thank you.
Thank you. The next question is from the line of Jinesh Joshi from Prabhudas Lilladher Private Limited. Please go ahead, sir.
Yeah, 2 questions from my side. First is with respect to gross margins. I think in the PPT we have stated that there is some pressure on gross margins due to higher paper prices. But if I look at our 9-month performance, we were at about 66% odd, and this is about 600 basis points higher than the comparable 9-month period. So first of all, what is the reason for this gross margin expansion despite higher paper prices, and how do you see Q4 pan out in that context?
Yeah, thanks, Dinesh. We had given a guidance considering the paper prices were there's a big jump in paper prices this year. However, there have been certain factors which have enabled us to maintain and slightly improve margins. Of course, the improvement of 600 bps may not last for the full year because, again, that's on a very small base. and considering that 80% of our revenue is yet to come. So I would not say that 66%. And of course, we had some opening inventory lying, plus we had liquidated a lot of the previous inventory to ensure that our margins are better. So there are 2-3 factors why our margins are improved. One is we've had lower sales return that has come into us during this year, considering that we've changed our policy and restricted the amount of sales return that will come back. Second is with the volumes going up as compared to last year in the first 9 months itself. Of course, a lot of economies of scale do come in. That has helped us improve. Third, of course, a large portion of this 9-month sales is from Chaya, where we have seen a good traction and improvement in margins because we shifted our printing operations for Chaya to Calcutta, so we saved some cost there. So we're working on multiple ways of keeping our gross margins there. So the guidance may not last out for the full year. I mean, we may not see a dip in the gross margin, but we're conservative. That is the worst case scenario that we had. But having said that, we should be around 60% for the full year, I would assume.
Sure, sir. And a second question is with respect to NCF. I mean, given the fact that it has already been announced for 0 to 2, so any feedback in terms of product acceptance? How many schools have we reached out to with respect to the new syllabus that we may have published, and any specific feedback which you would want to kind of give on this front?
We have taken out books as per the new NCF up to second standard in all the companies, and we're getting good traction and good response from the market. But actually, the whole response we will get from the market is next year only when the complete syllabus is out. A lot of schools are not accepting part syllabus. They want to change the books only when they get the full syllabus out. So some book schools have taken it, some schools are not taking it. So it's a mixed response. But when the whole syllabus is out, we are quite hopeful. Then most of the schools, a large part of schools in India will accept the new syllabus. So that is the way the schools normally work.
Sure. One last question. In the earlier reply which was given, it was stated that the sales return is lower this time around. So can we assume that provision for this financial year will be significantly lower than what it was earlier? And also, if you can give out some indicative numbers with respect to provisioning, that would help.
I'm not sure we would go in for a very aggressive lower provisioning, to be honest. We will be conservative in our provisioning because considering it's a full year that schools are open, a lot of orders are coming in. So we will do an average of what we've been getting in the last 2-3 years. So we will not do too lower, but again, we will be conservative in terms of that.
Sure, sir. Thanks and all the best.
Okay, I just want to give a clarification here. In an earlier question, we were discussing EBITDA numbers. So as Saurabh had mentioned, that 160 crore EBITDA was for the fourth quarter. And for the annual year, we are talking of 640 to 50 crore top line at 16% margins. So just wanted to make that clarification in case there is any confusion there. Yeah, you can carry on with any more questions.
Thank you. So that was the last question for today. I would now like to hand the conference over to the management for closing comments. Over to you, sir.
Thank you so much. And I thank everyone for taking out their time. And thank you for being there. And I hope we have a good year and a better year in the future as well. And we are on the path, as I said earlier, to zero debt. And we should be doing that by our end of quarter 4. And thank you for all for your support and your good wishes. Thank you so much. Thank you.
Thank you.
Thank you.
On behalf of Prabhudas Lilladher Private Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.